Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. First of all, thank you to all of you for appearing before our committee today. Vice Chair Barr, in your testimony, you said that in November, the Fed supervisors delivered a supervisory finding on interest rate risk management to Silicon Valley Bank. As you know, the communication of supervisory findings must be focused on significant matters that require attention. Matters requiring immediate attention, or MRIAs, are matters of significant importance that the Fed believes need to be resolved right away, including matters that have the potential to pose significant risk to the safety and soundness of the banking organization. My question, Vice Chair Barr, was managing interest rate risk listed in the MRIA section of the supervisory finding issued to SVB? And if it was not, why not?
Senator, we're still reconstructing the supervisory record. We've just started the review, but my understanding is that they were issued a matter requiring immediate attention based on the inaccuracy of their interest rate risk modeling. Essentially, the risk model was not at all aligned with reality.
A pretty interesting statement, if it was not aligned with reality. I recognize that you're going to have a complete report, and I'm not going to try to push you too far into this, but I'm really curious. What's the time frame that's expected for a response for an MRIA, one that requires immediate attention?
Senator, there's not a fixed amount of time. It depends on the issue, the scope of the issue, the complexity of resolving the issue. So I don't have a way of giving you a firm baseline on the action, but they're expected to be a top priority for management to address. And particularly in the interest rate environment that we're in, and knowing that the firm had been cited previously for other problems with liquidity risk management and interest rate risk management, supervisors would expect that that would take a high priority attention by top management. The supervisors met with the CFO of the firm in the fall, in October of 2021, to convey the seriousness of the findings directly.
During this time period, perhaps for as much as 6 months during that previous year, the bank was without a risk management officer. Is that correct?
That's my understanding. I think it's terrible risk management, obviously, not to have a CRO at the firm. You need an effective CRO as part of risk management of the firm. And as I indicated previously, the supervisors had told the firm in the summer that they had deficiencies in governance and controls at the management level and the board level, and that was related to their failure to appropriately manage risk.
My understanding is that there was a period of time there in which they were without a CFO as well. Is that correct?
I don't have the details of that, but I'm happy to get back to you.
Okay. And I recognize that there is a difference between a matter requiring immediate attention and a matter requiring attention. Can you kind of share with us the difference? I mean, there clearly is a defined difference between a matter of such importance that it requires immediate attention versus one where it requires attention. Can you talk a little bit about what the expectations are between the two?
They both really signal that bank management should pay attention to what's in front of them. They're not issued lightly. A matter require immediate attention is, as its name suggested, telling managers that they should place a priority on fixing this issue over other issues. But the exercise of the line between the two is a matter of supervisory judgment.
Just to follow up a little bit, and recognizing once again that we'll get a full report in the next couple of weeks, but it seems to me that when it turns into an MRIA, there is an expectation that the board or the executive officers would respond fairly quickly. To your knowledge at this point, was that expectation met?
Well, I think the fundamental fact is, the firm failed because of its interest rate risk and its liquidity risk, and that is, I think, evidence of the fact that they didn't respond strongly enough and promptly enough.
In other words, with the information that you had and that the regulators had, they were able to determine that there was a problem at the bank, and they directed that there be a response immediately, an immediate response, based upon the data that they were able to gather at that time. That's a reasonable assumption, is it not?
I don't know what the time frame set out in each of the individual orders were, so I'm not able to answer your question with precision, and I want to be very careful to be able to do that.
That's fair.
And not go beyond the
Let me
record.
just
But
finish with this, though. But we will receive that information when the full report comes out.
yes, on May 1st, we'll release the full report, and it will include the reports of examination, and so people will be able to see what's in the record.
Very good. Thank you. Thank you, Mr. Chairman.
Senator